The Orange County housing market has not felt these changes, but I think we're going to over the next couple of months. So in this monthly market update, I'm gonna go over the new listings, available listings, days on market, price, interest rates, and I'm gonna give you a summary, and then I'm gonna have my 2 cents of what I feel like is gonna go on, that we're starting to see the changes in the marketplace now that I think over the next couple of months are going to shift how we've been looking at the housing market for the last, honestly, a couple of years. So if you don't know who I am, my name is Christian Stubbs. I'm a team leader and owner here of Onyx Homes, and this is your July housing market update for Orange County. Now, these are always very local, very specific. These are real numbers, and I have a lot of information I'm gonna share with you in this summary, but let's get to the quick points very quickly. And by the way, if you're not subscribed to this newsletter and you're watching this and you didn't get it in your email address, go to ocmarketupdates.com and register for this newsletter. We send out a monthly market update every single month, and every Friday we send what we feel is the most important thing going on in our local market. Anyway, so let's get back into the main points. So the first one is new listings to the market. Now, new listings were down last month. So the new listings that hit the market in June fell quite dramatically from the previous month, and it's quite a bit lower than we've seen in previous years. Usually June is the first month where if you're looking at a chart, June will start to be plateauing before it starts going down for the second half of the year. Well, we saw a sharp decline after a big incline in new listings last month. So let me break that down a little bit. Last month, we saw more listings come to the market, and this month we are seeing fewer listings coming to the market. So normally we are plateaued right now. We saw a lot last month and not very much this month. So that's one point. So new listings are down. Now, we still saw more listings come to the market, obviously, but not as many as we would have expected. That's number one. Number two is the available listings to the marketplace. Now, this means all of the listings that are available, coming soon, and active. And this is a huge change. And this is the first time we've seen available listings over 4,000 in a really long time. We have just gotten so used to this low inventory market, and now we're starting to creep back up closer to normal. Now remember, Orange County as a whole usually has, in a normal market, between 6,000 and 7,000, maybe even up to 8,000 available listings. We're at 4. So we're still quite a bit below where we should be, but it's much higher than it has been. We've been around 3,000 for a long time. Now, days on market. So this is the amount of time that it takes from a sign to go in the yard in a listing to it going under contract. This is really unchanged. It was 9 last market update, now it's 10. So it did increase, but I would expect to see this increase more next market update. So we'll keep an eye on this, but what this tells us is homes are still selling quickly. Now, one thing that's important to mention, I'm gonna talk a lot about this in the summary down below, is that the numbers that we're looking at here for these market updates, this is real data, but it is from last month. So I expect to see days on market for this month of July to be higher than it was in June. All right, so that's days on market is still very fast at 10 days. Now, price is the next one. This is what everybody's always most interested in hearing. But again, it's a kind of a lagging indicator because these are homes that went into contract the month before and closed in the month of June, and here we are in July. So the median price has stayed the same. We are still at the peak of $1.2 million for the median home price in Orange County, which just means that prices did not increase last month, or at least the median home price didn't. And this is something that was not super surprising if you watched back to last month. The market update was saying that, hey, we've seen more inventory come into the market and prices are probably gonna stop increasing at least the rate that they had been. So to see a flat month of appreciation right now in July is not surprising. And last but not least, interest rates. So at the time of me filming this, remember, interest rates change every single day, if not every single minute. Interest rates at the time that I'm filming this are just over what 7.12 was it this morning. So this is a bit higher than it was the last market update. And I think that is because we got really firm confirmation that we're not gonna see very many rate cuts at all. We might see one this year. We're likely to see 0. So a lot of the people who are sitting on the fence of saying, hey, I'm waiting for rates to come down at the end of the year, we just might not see that. So that's kind of your hot take as far as what's going on in the housing market right now. We saw inventory, new listings coming to the market went down when it was expected to be up or flat. Available listings is up quite a bit. We hit 4,000 for the first time in a very long time. Days on market is still very fast at 10 days, up from 9. Price is the same as it was last month, so we have not seen any change in prices yet. Last is interest rates. We are expected to see interest rates stay pretty close to where we're at now, probably through the rest of the year. We might see a little bit lower towards the end of the year, but that's where we're at, just above 7%. So let me give you a little bit of a summary as far as what we're really seeing going on right now. So number one, like we said, more homes coming to the market this year has been a good thing. So new listings was down this month, but it was pretty big last month, and that has led to more available listings. More available listings means buyers have more to choose from, which means sellers have more competition. This is a healthy market. I think we forget, because we've been in this very hyper sellers market for a very long time, meaning at least since 2020, that when we start to see even the smallest shift from every house getting 5 offers to maybe only getting 1 or 2 offers, or God forbid, if you're maybe a little overpriced or the house doesn't look right, not getting any offers, that is a normal, healthy market. Remember, a neutral market is a market where a home needs to sit on the market for 90 days before going into contract, and we're currently at 9. So we are still in a hyper sellers market. I feel that we're moving a little bit closer to a more neutral market with more inventory coming and buyers still, a lot of them sitting on the sidelines. And honestly, this is the best thing we've seen come to the market, the new inventory, or the higher amount of available inventory, I should say. Since we saw, this is probably the best thing that's happened in the market since we saw rates drop from 8 to 7, right? We watched rates run up a couple of years ago from the low 3s all the way up to 7 and then 8. And this has probably been the best thing for the market since we saw rates come back down from 8 to 7. Now, here's the major point that I want to make. And if you're following along this far, thank you so much. If you're watching on YouTube, if you could like and subscribe, I would greatly appreciate it. It makes a much bigger difference than you think. But anyway, the change that we've seen in the last 30 to 60 days, so if you've watched the 2 last market updates, have not actually taken impact yet. We haven't seen them in at least the numbers. Remember, when we're making these market updates, we are pulling data from last month. Now, I will say, this is one of the biggest competitive advantage we have here at Onyx Homes over the marketplace, more than almost any other company, is because we talk to so many different people who are maybe in your shoes thinking about making a move, and we do so many deals. So we have a very, very close pulse of what's going on in a very local marketplace here in Orange County. And the reality is we just don't need to wait for the headlines or for the data to come through. We can talk about what we're actually seeing going on right now. And here is the shift that we're seeing. We are seeing the shift from a crazy seller's market more to a fair seller's market. Now, we're not going to a buyer's market. We're not anywhere near that range, but we are going from a crazy seller's market of multiple offers over list to a more fair still seller's market. And this is healthy, as I've said, overall for the housing market. For years, we've been in a market where the sellers were 100% in control, and it's nice to see buyers get a little bit more control and negotiating power. But here's one major thing I want to underline here, is that not every buyer knows what's going on like we do, and certainly not every agent does. If you're not doing multiple deals per month, you really don't have that close of a pulse of what's going on. Whereas if we're doing 10 or 20 deals per month, we're doing one almost every single day, and we can see the changes very quickly. Now let me get to the point that I promised earlier, which is my personal opinion. Not that that matters much of anything, but from doing a market update every single month for the last 2 years and being in thousands of different conversations and hearing a lot of different things about what's going on in only, again, our local market here of Orange County, I have a little bit of context. So if you've been following this newsletter for the last 2 years, you know that the real estate market has only gone up for the last 15 years in Orange County, right? Now let's zoom into just 2020 until now. We have really seen 2 different windows of opportunities, and one is talked about a ton, and the other one I really don't hear talked about very often at all. So number one is the 3% or lower interest rate craze of 2020. This was at the beginning of the pandemic, and everybody really knows that story. And the second one is something that nobody really seems to talk about, is the winter slowdown of 2022. Now I'll talk a little bit about the frenzy of 2020, but the point here is anybody that was brave enough to get into and buy in the housing market in the beginning of 2020 when the world was shutting down, interest rates were crazy low, and sellers really didn't know what was going to happen, those people locked in fantastic prices and really low rates, even though it didn't feel like it at the time, because it was crazy competitive with tons of offers. Now, fast forward 2 years, we saw interest rates leave that 3% range. And believe it, as a side note, I remember having conversations with people, talking them off the ledge, that rates when they went from 3 to 4% earlier in the year 2020 was not the end of the world. And it was a very big shift from just a year ago. We had 5% rates, 4% rates, down to 2.5% rates. When they went to 4, people started losing their minds. My point here is it's all about perspective. But anyway, let's dive back into the winter slowdown 2020. This was when interest rates jumped from 3 to 4%. That's what I just talked about. But then from 4 to 8%, we really saw the e-brake get pulled on the housing market here in Orange County, where buyers just fled out of the market, waiting to see what was going to happen. Now, from about April of 2022 till December, we saw a big pullback in pricing. We saw a 15% pullback in pricing, overall median home prices in Orange County. And this was when rates went from 3.5% to 4%, all the way up to 8% at the peak. And this pulled home prices back 15% in just 6 months, which is a huge swing. And when I say window of opportunity, we were talking again to a ton of people, and the people who got into that market and were willing to pay the high rates. It was new then, it's normal now. They were able to get in at screaming deals. And the median home price, for reference, went from $1,060,000 in April, $1,060,000 in April, all the way down to $920,000 in December. Now, when we were having conversations with our clients in November and December of 2022, or even before that, we were talking about this window of opportunity where buyers were going to come in. And the reason we knew this, the reason we had a strong feeling, I shouldn't say knew this, that home prices were going to peak back up in 2023 was because we were talking to so many people who were waiting for the new year. They're waiting for things to change, they're waiting for things to happen. They're gonna start their home search at the beginning of the year. And what happened is prices went up from December of 22 was the bottom at $920,000 for the median price, and they've only gone up since. So that was a window of opportunity. It was a 6-month period where the market made a change, and the buyers that went in and made a decision, they capitalized on a great opportunity. And because we have a pulse on the market, we feel that there is another window of opportunity coming this year, this winter. So if you are in the market, if you're thinking about buying, if you're thinking about selling, everybody has a unique situation, and not every price point, not every location is the same. So if you want to set up a time to chat, the links are down in the description. If you're thinking about buying, go to becomeabetterbuyer.com. If you're thinking about selling, go to trackyourvalue.com. And frankly, if you're thinking about buying and selling, if you need to sell before you buy, I would ask us about our Buy Before You Sell program, which allows you to buy your next home before you sell your current one. A lot of changes going on in the marketplace. I'm very excited to give you next month's market update, but let's chat in between if you're thinking about making a move, even considering it, honestly. So as always, I hope you found this valuable. Like the video, share it with a friend, and I will see you in the next one. Again, my name is Christian. I'll talk to you later.